Greetings, everyone. This is White Collar Forex, the home of professional trading. So, as I'm making this video, guys, um, the market is actually closed. As you can see, this is a trade that's open on one of my small accounts. I'm in a Euro USD buy position, and this is how it looks like on the chart, and this is how it looks like on the 4 hour. So the reason I'm making this video is basically to let you guys know that I'll be creating a series of videos explaining my strategy, a detailed series of videos explaining exactly how I trade and my strategy that I actually teach in the mentorship group. So I'll be giving you the strategy for free, but if you feel you don't understand certain things and you feel you need further guidance and one-on-one guidance from me, then you can always contact me and we can take it from there. So basically the videos will consist of 6 parts, right? So the reason I want to break it down is so that it's not an information overload, so you're able to take in a decent amount of information and process it and back test it while you wait for the next part. So it'll be um, compiled in such a way that it's cohesive and it makes sense, if you understand what I mean. So, like I said, the videos will consist of 6 parts. The 6 parts will be number 1, price structure. Price structure, guys, is extremely important. Without price structure, I don't even know what trading would be like. So it's the core of my strategy. Price structure is the very core of my strategy, and it's the reason I'm able to interpret the markets and see the markets for what they are. So that'll be the first part of this series. Number 2 will be impulse and corrections, right? So my definition of impulse and corrections might be different from what you already know, but you're going to have to unlearn what you know so that you can be able to put the puzzle pieces together as I teach you each and every step of my strategy. So with impulse and corrections, those are also the core building blocks of price structure. Basically, without impulse and corrections, you don't have new price structure. But I understand if you don't get what I'm saying right now, but as I teach you, you will understand what I mean by that. Number 3 will be supply and demand zones. That also is very important because my strategy is basically supply and demand. So we'll be going through that and how to identify zones and what zones are made of, basically. And number 4 will be candlestick patterns. I'll be teaching you what candlestick patterns to look out for in terms of entry, what higher time frame candlestick patterns to look out for, what they mean, what they tell you from just looking at them, the story behind them, because it's very important to understand candlestick patterns and what they mean in the markets and what they mean on a higher and lower time frame. Be able to interpret what a certain pattern means on the higher time frame and how it looks like on the lower time frame without actually having to go to the lower time frames. You understand? So I just want to train your eyes to be able to see that and interpret that much easily. So number 5 will be the Ema system that I use, right? So like I said, everything in my system goes hand in hand. It's interconnected. So nothing is independent. Everything is dependent on the other variable. For example, price structure is dependent on impulse and corrections, supply and demand zones depend on price structure. So one cannot exist without the other. You understand? So also with the EMA system, which is basically these lines that you see, the green, the red, and the black. These are my EMAs, right? They are also part of the strategy. They tell a story that is also part of the strategy. So they're not just there randomly, and I don't just look at them randomly without considering the other variables of my strategy, right? So that's that, and then number six, right? Number six is um, correlation. I'll be also teaching you how to correlate pairs and how to be able to tell the direction of one pair by just looking at the other pair, right? There's something called correlation, and if used correctly and if researched correctly, it can help you a great deal in trading Forex and makes analyzing different pairs much easier. So that's basically what I'll be doing with you guys for the next coming, I don't know, the next coming videos. And I hope that'll be very helpful to you guys. And I hope you guys will actually pay attention to those videos, because I'll be giving you some gold nuggets, some very important material for free, imagine. And like I said, if you feel you need further guidance, you need one-on-one, we can always do that. You can just contact me if you need that. So enough about that. Let's look at um let's look at the trade that I'm currently in, right? So I'm currently in the buy, and it's actually a late entry, right? Let me just briefly explain certain things to you guys before I just end this video. Yeah. So ideally, guys, you'd want to enter right where I'm pointing right now, right? This is the earliest entry you can get upwards, right? So like I said, the entry that I took is late, but anyway, let me explain why I took the entry. First of all, where I'm pointing with the arrow right now, right, where the arrow is pointing, that was previous structure, guys. What I mean by previous structure is that was the previous high, and this was the previous low. So this was a higher low, a higher high, I mean, and this was a higher low, right? And this move, let me just, this entire gray move here, right? This is an impulse move, guys. Why is this an impulse move? It's an impulse move because it broke previous structure, which is the previous higher low that price had formed, right? So this whole gray strong move with green bars going up is called an impulse move, right? It gives us new structure. This is new structure. This is the higher high that it gave us after breaking this one. So after that, it also gave us a zone, which is this zone right here. This zone here. Sorry about that. This is a zone, guys. But I'll explain supply and demand zones as we progress. Oh, also, guys, the last part of the series that I'll be touching on is Confluence. Basically, Confluence is other factors you consider that further solidify your analysis. Those are the things that you look at that give you that extra confidence when taking a trade, right? So this is the zone that I'm talking about. And you know what happened? Price came down to test that zone, and I entered a bit late, but yeah, I entered based on that zone, right? Also, like I said, Confluence. If you look at this red line here, this red line, that's a trend line, right? Price, every time price makes new structure, it touches the trend line. It touches the trend line. What is that? Confluence. So like I said, I don't just trade based on one thing. I make sure everything is aligned. Then that gives me the confidence to take the trades that I take. Right. So apart from testing the zone, it touched the trend line, giving us a what? A new higher low. Taking out this one. So it's a touch, it's a test of a zone, and it's a higher low. So that's just how I want to teach you guys how to trade. To trade with Confluence and linking your system variables with each other. So guys, that's just the introduction of what I wanted to teach you guys. And yeah, till the next video, this is White Collar Forex. I'm out.